Welcome, everyone. We are with Lior Gantz from Wealth Research Group. Welcome back, Lior.
Thank you for having me back.
Sure. Well, we're going to talk a little bit about precious metals today. First, we're going to talk about gold. There's a lot of predictions about gold and where it's going to go by the end of the year or next year and in the coming years down the road. But I want to approach it from a little different viewpoint about maybe the floor for gold, the support level for gold. Why it won't fall below a certain price level. And what do you think that price level is, and what's going to prop gold up to where it is now?
Gold really trades according to real interest rates. Real interest rates are either the Fed funds rate or the 10-year bond minus inflation. That's the real interest rates in the economy. And so you have two variables. One is the interest rate and one is inflation. Right now, inflation is coming down and interest rates are not yet. So what you get is an environment with very high real interest rates, because the market is forward looking and thinking that at some point, first it thought March, now then May, now June, and even July for the first rate cut. This puts gold in a weird dynamic. And as you can see, it's trading within a very, very slim range between 2010 and 2050 or 60 an ounce. That's a very, very tight little range, and it's not volatile at all. It just moves a few dollars a day, every day, at least for in 2024 and for a period of time there at the end of 2023. Those types of moves happen before big moves. And so the next move for gold will either be a breakout into all-time highs, and then very quickly with $50 and $60 and $70 days towards the 2400, because the thesis of the bulls would have been proven right. Or if the US economy keeps being so persistently good as it is right now, and it will allow the Fed to have a lot of breathing room before they cut. And let's say they postpone it now till the September meeting, then till the elections, maybe no cuts this year. If we get that type of scenario called the no landing scenario, then gold will collapse at least $200-300 from here. If you're asking me where are we, I think we are in a very interesting wait and see period, and we really need to do nothing if we're smart until the Fed tells us what's next, because it can literally go either way. If the Fed starts to cut, then real interest rates will come down drastically. But if the Fed chooses not to cut, and inflation just stays here, you're in a positive rates environment, and that's the worst for gold. There's literally no incentive for institutions to own gold in that type of environment. Now, we have a lot of central bank buying, and that keeps the price where it is right now, because the retail public is just not buying at these levels whatsoever. You can see it by the fact that silver is doing nothing either. So that tells you that the retail is out of this trade right now.
And that's where I was going to follow up with. The central bank buying is buoying up the price of gold. So when you said that we could see, if they don't cut rates by September, October, or by any time this calendar year, that we could see gold's price fall $200 to $300, that kind of surprises me, given the central bank buying and all the geopolitical situations that we still find ourselves in, which are likely not going to be resolved by then.
In terms of the geopolitical situation, we are entering a period between after the elections and at least for the first 2 years of the next president's term. The first 2 years of the next president, they will decide what the new Bretton Woods system will be, because the current Bretton Woods system that's been with us since 1944, it's effectively over. So globalization, the way that you and I have learned to experience it, is over. And when I say that, here's what I mean. The original Bretton Woods agreement is that there is a reserve currency. We should all use it around the globe because it's backed 100% by gold at $35 an ounce. And that original Bretton Woods agreement was predicated upon the Marshall Plan in Europe and the United States blanketing the entire world with security. How can we revive Europe and make it stronger so that the Soviet Union doesn't fully occupy it and conquer it? And then in 1971, some of the European allies of the States, predominantly France, which has always been America's number one greatest threat in continental Europe, said, we need an audit on this gold. And actually, they sent a ship to New York to claim their gold. And that's kind of what prompted the end of the gold window and started the 1971 era of Bretton Woods that lasted until 1991. That's when the Soviet Union collapsed, and effectively we didn't need Bretton Woods anymore. There was no real threat to the United States and its allies. But because normally empires like the Soviet Union would take decades, if not centuries, to disintegrate, it happened so quickly that America chose a very inexperienced governor from Arkansas over the absolute perfect person to lead America into the next stage, which was George W. Sr. By doing that, they brought in liberal left ideas during the Clinton years, and it opened up hyperglobalization, where you take countries that have nothing to do with the United States, they despise the United States, they hate everything that it represents, and you try to shove Americanism to them. The first thing that you got, the first wave of feedback was 9/11, and then you got once China got admitted to the WTO, you got China becoming a real threat and just disregarding all of the rules of WTO, stealing IP, doing whatever they want. Meanwhile, the West tries to keep this delusion going that everybody can be friends. If they all just made money together, then we have no wars. But by the time Obama gets elected, Bush's ideas in the Middle East fails, and Obama's idea in the Middle East and in China and everywhere else are a pure disaster. The worst president in American history. Just Woodrow Wilson can claim anything similar to how bad he was. My point is to kind of lay the groundwork for what's coming next. Because now, after Russia basically ended its agreement with Europe, and because of what's happening here in the Middle East, and because China and the United States are 100% in the American public eyes, clear enemies, globalization is done. And so the next stage is going to come either by force or by diplomacy or by a marriage of both, and it's going to happen now. The next 2 years will decide how the fragmentation of the global system comes apart and how the new one comes about. If you're asking about geopolitics, it's going to be very volatile, and I think that's why central banks are buying gold. For Wall Street to buy gold as a hedge, I have never seen any scenario where the stock markets are at all-time highs and gold is in a raging bull market. So if you're asking me what's stopping gold, even with all this turmoil and everything else that's going on, it's the fact that the U.S. economy is just crushing it. It is in such a huge leap over Europe and China. It's almost like it's pathetic what's going on in China and Europe. It's so bad how much America is leading. And I don't think gold can break out until such time as Wall Street says to itself, well, you know what? We're concentrated in these 3, 4, 5 stocks that everybody trades. How about I put some hedges on all of these positions? That's when I think gold can start to break out, but not before then. And so if the stock market stays strong, and if we have a no landing scenario, you're going to see gold starting to get sold off big. If you're not going to see that, if you will see the Federal Reserve saying to itself, well, if we keep rates this tight, we're going to have problems with housing and banking and other industries. Why risk it? Let's just start to cut real slow. Gold has a real shot. And I think in that scenario, the stock market will start to perform less well because some of the funds will definitely flow into real estate.
Going back to what you said about the Bretton Woods part two. We have Henry Kissinger to thank. In 1973, he set up the petrodollar system, and I think that's kind of what saved the dollar after the window closed in August of 1971. You mentioned that going through 1991 when the Soviet Union fell, and kind of bring us to where we are at now with de-globalisation. But let's talk a little bit more about the new Bretton Woods system that you had alluded to. What's that going to be like before I ask you about silver?
What's forming are alliances that are more regional in scope rather than global. And so you're seeing the emergence of NATO, a very strong NATO alliance with the United States. I think what the US will probably look to do is create a number of NATOs. So you have a NATO of Europe to counter the nuclear threat from Russia and any further advancement back into Poland or Romania or into the Caucasus, which is what Russia would really like to do. But it has to have control over Ukraine to do so. So that's one thing. I think there will be a similar defense pack here in the Middle East. Will probably include the Emirates, Israel, Saudi Arabia. It will be obviously to stave off the demons and the antichrists that rule over Iran. And then you'll probably have a third one between Australia, Japan, the United States, perhaps India. I think India will like to stay more independent and as a leader of its own group, which will be called the Global South, which I think India can lead in the 21st century, which will be these very high demographic countries, say like a Brazil, but they're very poor. But together they control 30-40% of the world's population. They'd like to have a say, but we've never had a strong alliance between poor countries. So it will be very interesting to see how India plays it. India is a very unique country, very unique. I think that's basically the new Bretton Woods, and obviously it won't be called Bretton Woods because I don't think it will be signed at New Hampshire or anything of the like. When you have this, you'll have another block, which will be China and its countries, Russia and the countries that like it. Iran already has the countries that it and the proxies that it is working with. You'll probably have the emergence of Nigeria and other countries in Africa doing the same thing. That will be the counter axis. It's the free world versus autocracies, dictatorships, straight-jacket, loony, crazy people. Theological type regimes that think that God has given them the earth. So between those, you'll have the emergence of connector economies. Those are economies that will stay neutral and can work with all of the parties. Poland is a case of one. Mexico is a very interesting case in one because it will continue to work with China, but it will be very important to the United States as well. I think Vietnam in the southeast, and you'll see more of them coming about in Africa and probably Latin America. And that's how the world will work. It will work in alliances, and some countries will try to play both hands. I think that the world made a huge mistake by not accepting many of the good things that America tried to offer the world, and now that's it. It's done playing nice, and I think that you're going to start to see that you never bet against America, and unfortunately, a lot of countries have thought that they can disrupt it, and now they're gonna suffer big time.
Well, thank you for that insight. Now let's wrap this up talking about silver. Why is it not doing any better than where it is? As I record this video, the gold to silver ratio is above 90-1. And with inflation happening, we've got a lot of different metrics out there that should be good for silver, but it's not really performing like we'd like it to.
Well, first of all, you had the inflationary scare, right? You had it in 2021, and the retail public did drive it up towards 30. What will it take for it to go way higher than 30? For it to go way higher than 30, there needs to be a bubble, because the mining cost for silver is about $15 to $17 an ounce. And so any dollar above that is the premium that you pay because it's an essential metal, because of supply chains, because of everything else. But because China is in such a deep depression that's obviously being moderated and censored by the CCP, but it's a full-on depression in China right now, and it will only get worse. That is driving down the demand for commodities, and silver is it doesn't escape that. Look at lithium, down like 80%. Other commodities are following suit. So I think that what will happen is in the next 2 years or so, like I said, many of these supply chains that were global and depended on other countries honoring agreements of mining agreements, trade agreements, and otherwise, they will falter, and the United States will realize it needs it needs a good, reliable source of silver, and it will probably turn to itself, to Canada, to Mexico, and recreating all of these supply chains, especially with commodities, take time. And I think that that's when you're going to see silver prices go up, because that will raise the cost to mine silver, and in turn that will raise the price of silver. But I think if you're talking about like mania type silver prices, where you start to see it go up by $2-3 in a month and into the 40s and 50s, I think again what you need is for the stock market to do bad, for interest rates to come down so that the dollar won't be so attractive for foreign investors. And if you can get both of these, basically a weaker U.S. economy where tech isn't doing so well, and lower interest rates, that's when silver can explode higher, probably towards the mid-30s.
All right. Well, thank you for your insight as always. Definitely appreciate your thoughts on a myriad of different issues related to the metal sector. And so, Lior, as always, again, I can't thank you enough for being here. And I want to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.